Hi, this is Jeffrey Kerr at Kerr Financial Group. Today is Friday, September 6th, 2024. We got our jobs data, so let's chew through some of the details on it and then kind of think about and maybe do some analysis as to what it may mean at a very superficial level. So first of all, the predictions and expectations were for 160,000 jobs created in August. The data is estimating only 142,000 jobs were created in August. The unemployment rate was 4.2, down from 4.3. Some of the leading groups in the job growth areas were construction, healthcare, government, and social work. One, I think, interestingly, another point here is that manufacturing lost 24,000 jobs. I think it's pretty important and something to keep an eye on. Now we turn to the revisions. As we pointed out, there's been consistent and constant, revisions from the numbers from the prior months. This is a long time thing that's been going on, but in the last year, year and a half, all of the revisions have been negative. It's just it is suspicious. Let's put it that way. So the revisions in today's reports for the July numbers were July originally reported 114,000 job growth, revised down to only 89,000 in July. Going back to June, June was originally reported at 179,000 job growth. It revised down to 118,000. Just think about that. In June, the revision from the original report is 34% lower. And in July, it's 22% lower. I don't understand either. The methodology is needs to be adjusted. How can you be that wrong consistently and to that magnitude? So out of this, the stock market did kind of firm up, but it's really sold off hard here on Friday morning, and it looks kind of dangerous here. I guess that the stock market and bond market, for that matter, because bond yields are down, about 8 basis points across the curve, that recession is becoming more priced in and maybe more of a risk that we end up in a recession. And also with interest rate cuts forthcoming, that the markets are reacting so negatively. Right now the environment is that bad news is bad news. In other times, bad news was considered good news because you get interest rate cuts and dovish policy out of the Fed. That's no longer the case. Commodities were down pretty good. Oil was down over 1%. Gold's down. So this whole thought, copper was down. This whole thought of a recession and slowing demand for some of these commodities, I think, is what's being priced in right now. And then finally, the Fed will cut rates in 10 days, and the expectations of the market is by the end of the year we'll have 100 basis points or 1% of cuts from here. So I don't know if that means they're expecting 50 in September and 50 in November. So we'll see. I don't know if there's a December meeting. I'll look at that to see if that's maybe price another thing. I think it would be a big problem if they did an intra-meeting rate cut. I think that send a bad signal to the markets and to investors. Have a good weekend. Thank you for listening, and we'll be back on Monday. Goodbye.